Happy Sunday to everybody. I just wanted to bring a few educational things about the market, the economy, and without further ado, this is for informational, educational, and entertainment purposes only. So, without further ado, as we just said, let's share our screen, move to our PowerPoint. Get to the first screen. As I've said before, and it bears repeating, I don't know why anybody in this environment would want to be in an index or in individual stocks. Fixed annuity guarantees gives you a bonus. Bonuses right now are anywhere from 20 to 33%, and annual earnings average growth is 12%, where the index season average is 7.5%. Where can you get this in an annuity? Or you can get it in a life insurance policy. And with the other benefit of life insurance policy, there's going to be a mandatory long-term care coverage in the state of California. Will the state coverage be better than what the insurance companies have been working on for a long time? I don't know. It's questionable. And in Washington state, the long-term care insurance mandatory law requires employers to collect 0.58% of wages through payroll deduction. If you have your own long-term care, this is not deemed necessary. It'll go through payroll deduction from employees working and merely residing in the state. What happens if you leave the state and you paid all this money? Well, you're no longer in the state, so I doubt if you'll still be eligible for the state long-term care. So this is another benefit of the life insurance index universal life. One, your money will never go down. It's guaranteed with a floor. It'll always go up. And 8% annual return is pretty much close to a 12 to 15% taxable return because there's no taxes on your IUL. How we teach you to take the money out of it, get a 12 to 15% taxable return with an 8% return in your account. So let me move on. This is our heat map last week where money was moving out of technology. There are some pockets of strength in technology, the networking group, and a few others. Communication services was a mixed bag. Same with consumer. So this is kind of our heat map for last week. Look at the Dow. The Dow is in a trading range. It's up and down until we get more information. It's running from report to report, CPI, PPI, inflation, whatever, what have you. If you just look at this chart, this looks like an inverted hammer. An inverted hammer is when the indexes have sold off. And I suppose you could call this a hanging man if it was up in this area. If it's down in this area, it's considered an inverted hammer, and the stock or index usually goes up from here. When you look over here at the CCI and the stochastics, got a mixed bag as well because one is going down and the other was going up. And we got a little bit of declining volume on Friday. So let's take a look at our next chart. This is IWM, small caps, kind of inverted hammer, so could possibly go up some more. We got declining volume on sales, on selling in the IWM small caps. So what happened before. Here's an inverted hammer before, and it has gone up. So we think it's going to go up a little bit. I wouldn't say it would go up a lot. It's still under its moving average. So once again, we got the CCI going down and the stochastics going up. So it's really hard to tell if that'll give us any more from the NASDAQ, the QQQ. We got a hanging man over here. Volume is increasing. Stochastics is bending down over here. I mean, CCI is bending down, and it's doing the same with the stochastics. So that tends to favor that the NASDAQ will continue to retreat. Will it go down to its moving average here? That's a question we just can't determine at the moment, but we feel it's going to go in this area. In the past, I've mentioned that once an index gets so far away from the moving average, it tends to pull back as well. So that's 1, 2, 3, 4, 5 reasons why, just from a technical basis, that the NASDAQ we feel is going to be pulling back. So let's move on to the S&P 500. S&P 500. Once again, we got a hanging man here. Volume was decreasing slightly. We got a CCI that is pulling back and the stochastics that are pulling back. So those number of factors, we think the S&P 500 is going to pull back as well. Now on the VIX, or the volatility index, looking into June, we just got a high number of trades in the VIX, suggesting that the VIX is going to sell off. Do we know when? It could be June, could be August, but it's just kind of amazing that we got these high numbers, 581,000 at 30, and we have 442,000 trades at 40, and then we have 113,000 at 50. So that would be a huge move back. Now, JP Morgan is predicting that the S&P 500 will retreat to 350 or 3,500. So we'll just have to see if that comes to fruition. Got a chart here looking at the top stocks on earnings surprises. Caesars, 474% earnings surprise. Corteva, 67%. Axon, 33.8%. So there are some stocks in this market that are doing well. We continue to see that even though the Federal Reserve says got everything under control, U.S. banking crisis, close to 190 banks could collapse, according to the study. Of these banks, what are the top 10 that are doing worse? PacWest Corp had like 9.2% of depositor money moving out last month. Continues to be a bad sign. And these are the top 10 that are doing the worst out of the 190 regional banks. So this is our debt crisis, the debt ceiling. As time goes on, it's only going to have a worse perception in the market, and this is going to put pressure. And this is why I feel that a number of trades in the volatility or VIX index are increasing. This is just showing, absent congressional action, the X date for when the federal government will be unable to pay its bills in full and on time. Stanley Druckenmiller, on a recent webcast expects that the indexes are going to remain about where we are for the next 10 years. Of course, it doesn't mean that it'll be lost decade for investors, because in the period of 1968 to 1982, the stock market, if you were in the right stocks at the right time, you still made money. So let's look at the number of days the S&P traded on 4,000 to 4,100 since it had a handle back in 2021. You can just see the market just isn't gone anywhere. So it's just treading water over time. Now, looking back at history, in similar markets where the indexes didn't do anything, but individual stocks, if you were a good stock picker, these are the stocks that did well. We look back at history to see if we can project future. So McDonald's, to Humana. You can see the moves that we had, 14 to 62. LQM went from 240 to 22. Humana went from 8 to 34. Walmart went from 9 to 80. So there is that possibility. And then moving on, that is our report for today. This has been Mornings with Michael. Thanks for joining us. Hope your Monday gets off to a great start, and we'll have a report in the morning on how the markets are doing. And let's just keep moving and keep our goals going, keep our activities up, and we'll get this economy back on track. Thanks for joining.